Hey everybody, let's talk about market cycles within a bull market rally. We always talk about market cycles within the big long-term viewpoint of the stock market where you have bull markets, peaks, bear markets, bottoms, back to a new bull market. But I want to just talk about the bull market side of things, okay? Where the market is running because there's different aspects of a bull market that I want you guys to understand. First, a bull market, and this is going to sound stupid, but a bull market starts after a bear market, after a significant sell off, after a big decline. That's when you get the start of a bull market. What makes the bull market special at the very beginning? It usually entails some big time price movement, some really big ones. And I just did a podcast on this too. It's worth listening to that as well. But I also wanted to follow it up with a YouTube video because I wanted to show you some charts as well so you could get a visual of what I'm talking about, not just something through your ears. So let's talk about the bull market rally at the very beginning. It's usually strong. So we had a big bull market start here in late December, okay? And I know that all the bull markets are different in terms of the time frame. You can have a bull market intraday, you can have it on a weekly chart, you can have it a monthly chart, you can have it on a daily chart. Well, we had a huge sell-off back in October. It took the market about 20% lower. When it finally bottomed on December 26th, okay? This thing didn't just rally like a couple hundred points on the Dow or 20, 30 points on the S&P. It rallied over like 1,100 points on the Dow, rallied over 100 points on the S&P 500. It was a crazy day. And that was when you knew that the stock market was starting to bottom because you had this massive move. We talk about dead cat balances and stuff, and everybody likes to talk about, you don't get a lot of dead cat balances in this market much anymore, to be completely honest. You just don't. You could say that back here on November, that was a dead cat bounce, sure. Back in late October, dead cat bounce, sure. But it's not technically improving the picture at all. All you had here was almost breakouts of the previous highs, but no cigar. So it just kept on going back lower. The trend line would continue to resume lower. But when you get these big massive moves here, it goes beyond a dead cat bounce. It usually takes you back up to all-time highs because that's what a bull market's going to do. It's going to take you back up to the previous highs because they're long-term and they're sustaining. And that's so far here in 2019, it's been very bullish. We had a bad month of May for the S&P 500. But it's back to all-time highs again. The first stage, you have that initial huge bull market breakout. It's going to have like consecutive days of, 1,000-point rally on the Dow, maybe followed up by another like 300 or 400-point rally on the Dow. I mean, you're going to have big 1% to 2% moves on a regular basis. You're going to see it all the time. And that's what you had here. Late December, January. I mean, it was all about these big, massive moves. Does that mean that you're not going to have any down days in the stock market? No, you're going to still have some down days in the stock market. Of course you're going to have some down days. So after you get this big initial move, what happens next? What are we talking about? Is it just going to keep going, rocketing to new all-time highs? Are we going to just keep seeing these like 1% to 2% moves forever? No, of course not. The market doesn't go up perpetually forever. It takes on different stages. It takes on different looks. Then what you tend to get this initial scare. You are fresh off of the lows. Yeah, you've had a pretty good run of a few days or maybe a couple of weeks, but then there's this scare tactic that the market tends to try to see if it can shake people out of their long positions to think, okay, the market's going back lower again. And it works a lot of times. It's worked on me before because a lot of times it's a violent move. Maybe it's just a one-day move. Maybe it's a couple week move, but it happens and it kind of scares you a little bit. And you had that here. Okay, you had a little bit of consolidation going on here in the very beginning with the S&P 500 after it had made these two massive days off of the lows. Then you had this huge day to the downside. Apple had like a negative earnings guidance that had come out, and it scared a lot of people right there. I mean, it went way down. You had almost like a bearish kicker kind of trade pattern here. If you're looking at it just from this perspective, you're going to say, we're probably going to go test these lows again. And that's a reason to go book some profits, especially after this huge decline that you just saw. But then the following day, what happens? It gets people to get out of their long positions, and then it just keeps on rallying. So then what you tend to see, the third stage, is it's the bigger, more sustainable rally, and you're going to get this huge, increase that keeps going on and on and on. Now, along the way, you may see some of these as scare tactics. You had it here back in early March, where it's declined for 5 straight days, but even more so back in May, where, okay, now we're talking about, everybody was talking about, a double top in the market here. You had a topping pattern here and a topping pattern here. We're going to get a double top. We're going to break the December lows, and then we're going to just keep on going south from here. Maybe we'll go back down to the 2016 lows. Who knows? But that's what a lot of people were talking about. And then you also had a head and shoulders pattern here that did not do too much, quite honestly. Whoa, I got a lot of. I'll refrain from pulling up all my lines on the chart, but you can see the dotted line there. There's a head and shoulders pattern, and it breaks below it, but it doesn't do much. It goes down below for maybe like 3-4 days, and then it goes right back up. So this was more like another shakeout topping pattern, and it concerned me some. But the key was is there wasn't a lot of heavy volume to the selling. May's selling volume was very low. It was not that great. You had a couple of days that were above average that did shake people to its core, but overall, I mean, the volume wasn't nothing like what we saw October through December. I mean, nowhere even near that. So for me, I never really got short on the market. I tried it a couple times and didn't have that much success, believe it or not. The market just really never showed any panic in that. So you had to realize that and say, okay, this isn't a time to go ahead and get short or to start taking a more of a long-term bearish perspective, because it's not really going to go lower for that much longer, and it didn't. June came around and it just rallied right off the lows. It went crazy. You get past these initial, scares, and you get past the big volume buying and the bottoming process that takes place, followed by the 2 and 3% moves that you're sometimes seeing on a daily basis. Then what's next? Then you get that slow, steady climb. When you get around to the all-time highs, it just starts to slow down a lot. And so right now we're in the summer months of trading. That even makes it even worse, because you're seeing like 2 and 3 point moves on the S&P, which tends to be like, almost like a regular price action for the stock in the summer months. But it's also, the market's starting to get tired. It's trying to find new buyers at all-time highs, and it can be hard. So what it needs to really propel it to new highs, continue to keep propelling it to new highs, is this fear of missing out, FOMO that they call it, FOMO, fear of missing out. And that's what starts to propel it too, that everybody's worried about people missing out. People are getting into the stock market for the first time now because they're hearing everybody talk about how much money that they're making. And then all of a sudden it just keeps on going up and up and up. You can have these very low, moderate price swings higher where it keeps on making new all-time highs, but it's not making like any 1 or 2% moves. It's just like, 6 points here, 5 points there, and it's just not a lot of big price moves. But that can go on for a long time, months even. But then after that, what happens? Well, if you go back just to recently, when we were right before we had the huge Q4 sell-off last year, what we were doing the same thing. Look at this price movement. Was it going up higher? Yeah, it was going up higher, and it was going up steadily higher day after day after day. Yeah, there was a couple pullbacks. That's normal, though, in a bull market. You're going to have some pullbacks. You had some here in August, again in September, again in mid-September. But then all of a sudden, the bottom will just fall off. It takes the elevator up, and then it takes the stairs up, and then the elevator down. It only takes the elevator up when it forms a bottom. In the later stages, it's like taking the stairs up, and it gets very slow and monotonous, and you almost get too comfortable with the market. You're like, okay, the market's probably going to be up another couple points today, whatever. But then all of a sudden, you get this. You get one of these big, huge sell-offs, and that's what you got to start being wary of. So right now, while we have these low volume rallies, they're great. You're still able to build your portfolio and increase the profits on the bottom line, but eventually it's going to run out. And when it does, you're going to get a sell-off like this again. And you can see it all throughout. Now, the one exception I would probably say, this was a real weird one here, because it was coming off of the Trump election, and then in January 2018, we just had this like massive rally to the new highs. And I guess that on the other side of things too, when the market looks like it's getting too good to be true, be very weary of that, because you can all of a sudden have a huge sell-off like what we saw in February of 2018. Look at the sell-off that we had in 2015, following months and months and months of some very dull price action. It also took place over the summer, but we weren't really going anywhere, and then all of a sudden the bottom fell out. That dull price action where it seems like, okay, we're kind of going higher, but not a lot higher, that usually leads to eventually a big sell-off in the market. And then you have in 2014, August. Look, we're kind of steadily climbing higher, and then the bottom falls out. Again, what I want you to understand, in these market rallies, you have a steady climb higher, and then you have this sell-off, okay? And then after the sell-off, you'll get this huge surge of buying that ensues, where a lot of people are buying. They're trying to get in at some of these cheap prices. They're wanting Apple at 140. They're wanting these 50% discounts that everybody's seeing across the board. It takes this huge swing higher. It has a couple of weeks or a couple of days of where there's these like initial sell-offs to scare people out to think it's going back towards its previous lows, but then it just sucks right back up towards the all-time highs, taking 2-3% gains on a daily basis. And then as it gets close to those all-time highs, it starts to slow down a little bit, and it starts to see like these very small, low volume moves, but it keeps climbing higher. And then all of a sudden the cycle repeats itself again. You're going to see a big sell-off. But the big one I want to show you was the Great Recession in 2008. So you'll see here, I mean, we were climbing in 2007, climbing in 2006, but it started to slow down in 2007. You weren't seeing huge price moves. And then all of a sudden in late 2007, it started to break down some. And then it really just fell apart in 2008. But check out 2009. Look at the huge moves. The S&P goes from, well, this is on SPY, but let's look at SPX. The S&P goes from a low of 666. Yeah, I know that's kind of demonic, but nonetheless, over the course of the next few months, it goes from 666 all the way up to 1050. That's a huge move. That's like, I don't know, like 70-80% move right there. And then it slows down, and then it just keeps on trucking. I mean, you can see these patterns in the monthly charts. You can see them in the weekly charts. You can see them in the daily charts. You can even see it on intraday charts. When you see a big move where the market moves up 20-30 points in the S&P in the first 30 minutes to an hour of trading, and then it just kind of slowly trickles higher, or maybe even sells off a little bit going into the close. Yeah, that's typical bull cycle, bull market behavior. So again, I urge you to check out my podcast. It goes along well with this. You can go get that on iTunes, Swing Trading the Stock Market. Watch it in conjunction with this video where I provide you with some visuals, and check it out. Some really good lessons to understand. This comes from my experience as a trader going back to when I was 11 years old. I've been doing this for a long time, but these are the market behaviors that I've learned to trade over the years. That's proved to help me stay consistently profitable on a regular basis. And I encourage you too, if you want to check out some more of my resources, training videos, go to shareplanner.com. I also have a swing trading splash zone that you can sign up for, and you'll get all of my real-time swing trade alerts via WhatsApp, via the chat room, email, text, whatever you want. I'm here to help you learn how to grow as a trader. Just check it out, shareplanner.com. Thank you. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.